Good morning, good afternoon, good evening. I hope wherever you are in the world, you're having a good day. Today's an awesome day for some Chain Fusion Live, where we are going to talk with Andy from Loka Mining. Chain Fusion Live is our opportunity to weekly talk about all the amazing apps that are using multiple blockchains in a nice, seamless manner. And Andy's here going to talk about ICP be used to decentralize the mining within the Bitcoin mining community. So, Andy, how are you doing?
I'm good, thanks, Kyle. It's been
It's
an honor to be here with you.
Yeah. I've been watching you for a while now, and I'm just loving where Loka Mining is going. I've always been like Bitcoin was like my original love within crypto, and so like all of these novel Bitcoin apps that are being built on ICP, I just find completely fascinating. And I think you might have the most fascinating of all of them because you're attacking a key problem within the Bitcoin world. So give us kind of like the quick 2 minute like TLDR of what Loka mining is, like high level, the elevator pitch.
All right, okay. So imagine Bitcoin miner is like a corn farmers. What we do is, so corn farmers can sell their future harvest, right? Usually because they can use that money to grow more or acquire more uh, farm, basically. So that's what we do with Bitcoin mining. Bitcoin miners also need to always increase their hash rate because difficulty in Bitcoin mining is always increasing. So for Bitcoin miners, usually usually they have only two options. First, they sell their Bitcoin from their previous mining activities, and then they buy more machines, or they use their Bitcoin to go to decentralized DeFi like Aave or any kind of other like DeFi protocol. Basically, they put their Bitcoin as a collateral and then they borrow stablecoin and then they use their stablecoin to buy mining machines. So, but this mechanism has a profound risk because when the Bitcoin prices dip and then they will get liquidated. So basically, they're getting double exposure.
Mhm.
So in our protocol, basically we connect Bitcoin miners to all investors all over the world, so that they can sell their future mining rewards in a small discount, and then for investors or anyone who holds Bitcoin or want to get Bitcoin at lower than market price, they can do that by providing financing to Bitcoin miners. And then basically it's like buying Bitcoin at lower than market price. That's kind of what we do. And yeah, to build that kind of protocol, we need to build our own mining pool. So that's why we built our decentralized mining pool.
I, I love it. So it's basically from the consumer's perspective, they can purchase Bitcoin at a discount. From the miner's perspective, they can essentially sell their future Bitcoin rewards today. So basically,
Yes.
bring forward some of that financing, which might even allow them to purchase equipment to make it more likely to get that reward more quickly, right? Um,
Yes.
before
And
I mean, there's a whole many layers, but before we do that, I just want to know, like, going back, like, what were you doing before Loka mining, and then how did you come up with this idea for Loka mining?
okay. So I've been a founder since like 8 years ago. My first digital startup is a marketplace for catering. I'm from Indonesia, so this company is still running, serving Jakarta area, our capital city. Basically, this company is connecting food caterings to office workers all around Jakarta, and we deliver like around 20 to 30,000 meals per day right now.
Hmm.
And I exit from the company and still have some small share of percentage of equity there. So that's kind of like my first digital startup. Um, it's also it's like 2016, and then fast forward to 2 years ago or last year. The idea, the origin story of Loka is basically for like my first Bitcoin is 2015, right? So, and my co-founder, we've been mining Bitcoin since 2017, but it's not like my main job because I'm doing like Web2 companies. Last year, basically, we were trying to have we're having the idea to use excess energy from hydropower plants in remote island in Indonesia that has been idle because of the surplus in coal power plant. So there's been a misconception about renewable energy feels expensive compared to coal energy. Um, and then that's why a lot of hydropower plants in Indonesia is actually idle because the government is not buying the electricity anymore. But
Hmm.
this is yeah, so we kind of okay, the idea is okay, we have a lot of idle power plants and then we can just put Bitcoin miners next to the power plants and then we get like very we basically can buy directly from these idle power plants, right?
Hmm.
Because the on the energy on the grand scheme of energy mechanism, like the energy generation part is actually cheap. It's very cheap because it's like there's zero cost. It's just gravity, water, and gravity, and you get energy, right? But the what makes it expensive is the logistic infrastructure to bring the the electricity from the power plant to the city. That's
Hmm.
the more expensive part. So actually, Bitcoin mining provides demand on demand or so that if there's excess electricity, you just put Bitcoin mining and then you convert that into value. You just it's like essentially that what it means like the store of value is. It's like battery. So, but then the concept evolved, and because we kind of because if you're into problem solving mode as a founder, and then you tend to interview with a lot of people, and then I talk with a lot of Bitcoin miners, and then also talk with investors, and then we kind of okay, this is actually bigger than we thought, and then there's a lot bigger problem that we can solve. So we go into the platform level. It's not we're not going to be like the Bitcoin miners uh, become the Bitcoin miners, but become the platform that connects all the Bitcoin miners all over the world to the investor who want to put money and then to have exposure to Bitcoin mining activity and get Bitcoin at lower than market price. That's basically the origin story of Loka.
I see. So I love that you had the experience as a Bitcoin miner, right? And you got to see basically how the market works. And what you're saying about Bitcoin miners being able to go to the power source as opposed to almost every other consumer of electricity, the power source has to be infrastructure to that source. But the fact that Bitcoin can go to the power source is a very interesting dynamic for a miner, as well as the ability to turn on, turn off, within a few minutes is also a pretty interesting demand perspective on electricity. I've listened to a lot of great podcasts talking about that, but then you notice that the more pressing issue might be access to financing or liquidity of the future
Yep.
return. The corn, my brain is still working through the corn farmer analogy, which actually makes a lot of
Yes.
sense. And so kind of walk us through. So then you saw the market need. How did you then go from, okay, there's a market need for access to this liquidity or access to this financing, as to now creating Loka Mining? Like, what was the thought process there?
So yeah, so as we become the Bitcoin miners looking for because the idea like okay, we have this space, we have this access to energy, and we need capital to buy mining machines, right? And then okay, so this is some kind of like cloud mining platform, right? You have you promise to you ask money for some people, investors, to invest on you with the promise to buy Bitcoin mining machine, and gives that some of the mining reward to these investors. But this actually give a very risky exposure for the investor itself, because if we get the money and then as a Bitcoin miners we get the money and then we just run away, then nothing's gonna happen, right? So this kind of a this is actually the problem that we see in this space. So what we do is creating a protocol that makes a secure for two for these two parties on supply and demand, because the protocol itself is let's say you're investors, you want to invest in a Bitcoin mining activities, and you will want to have your investment secure, right? So what we do is we collateralize, we make a system that Bitcoin miners or their insurers need to collateralize the contract. So if you're if you're investing in a Bitcoin miners to have the future mining reward to get Bitcoin at lower than market price, the contract is always secure. It's always collateralized. So that's what's kind of like that's the aha moment, because when we try to do that selling their hash rate, selling the investment, we kind of stuck in that kind of problem. Unless you're a very big companies and you are reputable companies, then you're not, there's no one gonna invest in you. And like in the crypto space, 99% of cloud mining is actually scams.
As in, they're just basically looking to charge a monthly fee, but don't
Yeah.
provide the hash power, or
Yes. Yes.
okay,
They just basically accept money, and then probably at the first few months they give Bitcoin from somewhere, and then liquidity grows, money coming in, they just shut down and
yeah.
run away.
That's I mean, I feel like I mean, that's not a new problem, but obviously crypto's kind of provided that like rug pull aspect. And it sounds like crypto's also the solution to the problem. So while crypto may have created the problem in a way, it sounds like crypto's solving it. And like you said, that the idea of operating under operating basically off of a smart contract locks in the agreement. And so walk us through then, how do you so if we dive deeper from the perspective of the mining pool, so how do you guys
Yep.
verify your hash power? How do you make sure that people who participate in the mining pool, that they are actually getting the hash power they expect to get, all of that?
So, okay. So let's assume that you're a investor. You're buying hash power equals to 1 Bitcoin. Let's say right now the Bitcoin price $60,000, and then you put money in stablecoin $60,000, and what you get is a contract. Let's say the contract itself has a maturity for, let's say, 1 year, and then the miners need to put 1 Bitcoin as a collateral, uh, according the same price, according to the rate of the Bitcoin price right now. So every 24 hour, then our protocol will check if this miner sending the correct amount of hash rate or not. If yes, and then 1 per 365 days, collateral will be returned to miners, because it's
Okay.
a 1 year contract, right? And then the mining reward will be transferred to you. Everything is on chain. And so by the uh, by the time it reaches half of the contract in the month number 6, half of the collateral will already release to the miners, and then you will already get more than half of one bit of Bitcoin, because the contract itself, it worth more than, because you're basically buying Bitcoin at lower than market price. You get discount for the Bitcoin itself. And because this contract is collateralized and tokenized, that means that you can use whatever you want with that contract. You can sell it on secondary market, or you can use it as another collateral, and then you
Hmm.
borrow stablecoin, and then you use that stablecoin to buy more contract, and then you can do it all over again. You can leverage that basically.
Yeah. So almost that's interest. That's an interesting dynamic too. The ability to leverage your future contract. So in terms of so as a consumer, then you don't take delivery of the Bitcoin the second you buy it, but you basically lock in the price that you're going to buy it for the next year, correct? So if Bitcoin
You
today is at
Yeah.
62,000 and I buy a contract for 60,000, I'm going to get that Bitcoin, but it's going to take 365 days. But I've locked in that 60,000 price as well, right?
What you lock is the number of Bitcoin,
Okay.
not the price in US dollar, because essentially you buy Bitcoin, you get one Bitcoin. If, let's say, on the first day the Bitcoin miners walk away, they just shut down their operation, you will get 1.1 Bitcoin, because it's actually over collateralized.
Hmm.
So you get at you always get more Bitcoin compared to with if you buy from the market.
Okay. I see. Correct. I understand.
Yeah.
And then from the miner's perspective, the people who are providing hash rate. Well, actually, let's ask this: Is it so it's a decentralized pool? So can anyone participate? Can anyone bring
Yes.
a GPU and
Yes.
start mining? Okay.
Yes. Anyone can like, yeah. That's kind of the insight we have, because let's say you were a Bitcoin miners in Machu Picchu or in Malaysia or any kind of other remote areas, you don't have access to finance.
Hmm.
You cannot do anything. Like if you're just mining, you basically just wait for the Bitcoin to come from your mining rewards. Uh, but it's not like in the other part of the world. If you're a big mining companies in North America, what you can scoop very cheap liquidity by IPOing your company. You can sell your public shares, and then you get very cheap liquidity from retails, and then you buy more mining machines. That's why two biggest mining pool is controlling more than 50% of hash rates, because of very efficient financing, very cheap liquidity from these big mining companies. So what we do is provide kind of um, more fighting chance for small medium miners from all over the world, because like big miners probably don't need us. They can just like they have easy financing. But for like other miners using exotic energy from like hydropower plant or flare or any kind of excess energy all over the world, they can use us.
That's an interesting dynamic there too, because the majority of Bitcoin mining, I think, has moved. I think it's like 40% of all Bitcoin hash power is in the United States now. But also developed countries tend to be more likely to have Bitcoin mining presence, which is inverse to what you would expect, because it's usually those also usually have higher electricity costs. But I think what you're pointing out is where the liquidity sits is where the mining goes. And it's kind of created a bit of a problem from a decentralization aspect for Bitcoin, where most of the mining is now participating in just a few countries. So do you kind of see like Loka Mining is also a solution to that, where, like you said, it gives a global fighting chance of Bitcoin miners kind of
Yes.
participating in this?
Yeah, because the protocol is permissionless. You don't need any Like you just need provide hash rates and collateral. That's it. We don't ask anything.
That's and I would imagine a decentralized mining pool. If you solve the liquidity problem, mining will then move to where electricity is cheaper because they'll have a competitive
Yes.
advantage. So it
Yeah.
does seem like that would instantly kind of, not instantly, but over time, encourage more and more investment into mining in countries where maybe it's not currently. And that those
Yeah.
investments would,
Yeah. Yeah. We basically decentralize the hash rate and also decentralize the capital because like anyone can participate in this ecosystem. You don't need to be like a very big institution that needs to have, like a signed contract. You don't need to go to Ethiopia, for example. We have miners from Ethiopia also to check like whether it's really a legit operation or not, because doesn't need that. It's trustless. As long
yeah.
as the contract is there, it's collateralized, then you don't have any counterparty risk or centralized risk.
What about, so in this arrangement between miners and liquidity providers, or people who are purchasing the Bitcoin at a discount. So obviously there's risk in the sense of, just because you have the hash power doesn't mean you solve the difficulty problem. You can have a streak of bad luck, right, and not get
Oh,
any
I see.
reward, or you could have a streak of great luck and just produce more Bitcoin than you would expect given your percentage of hash rate. Like, who in this arrangement, who assumes that risk and
Yeah.
reward if more Bitcoin
So
is generated or less Bitcoin is generated than expected?
yeah, so this is actually a statistical problem, right? It's a solvable math problem. So what we do is the infrastructure we need is to get this hash rate, we need mining pool. What mining pool does essentially is converting lottery mechanism on Bitcoin, like you mentioned before, so that like because every 10 minutes there's only one miner get the block, and mining pool essentially pool all the hash rates and then makes when the mining pool get the block, the reward is distributed pro rata. Whoa, I have the flow. I have the pun. Yeah,
I don't know how to figure out.
distributed pro rata. Yeah, yeah, you can use this actually. Yeah,
I've noticed it with this as well, although for me it doesn't seem,
yeah,
might be a setting on your end.
yeah. So that's kind of what mining pool does. And mining pool also need liquidity because it doesn't always get a block every day, right?
Mhm.
So even though it doesn't get any block, miners need to get paid. So it needs to have liquidity to pay upfront miners every day. So what we do is also decentralize the liquidity. Everyone can put Bitcoin in the mining pool, and then the Bitcoin used to pay upfront miners. And when the block reward came, basically the mining pool always cut a fee from that
Mhm.
from this activity, and then the fee is gets distributed to the liquidity provider. So it provides, and from the perspective of liquidity provider, it works like probably like Lido. If you familiar with Lido, it's basically you put Bitcoin and then you get native yield in Bitcoin.
Mhm.
And when you put Bitcoin, we Loka will give you a liquid LP token, and then you can use it just like Bitcoin in
Yeah.
our ecosystem. And then you can also um, redeem it to Bitcoin. It's always 1-to-1, and it gets rebased every 24 hours. When it gets blocks, you grow your Bitcoin automatically.
Okay. And that peg in, peg out, I assume you're using ICP Bitcoin integration. So
Yes.
protocol level, you guys aren't actually taking custody of the Bitcoin at any time. It's held in a smart contract on ICP.
Yeah, we don't take custody. It's just the smart contract
Okay.
takes the custody. Yeah.
Yeah.
It works by on the native Bitcoin converted to CKBTC, and then the CKBTC is actually providing enter the Bitcoin liquidity pool to pay upfront miners, and then we create a one-to-one rebase token from the CKBTC whenever the CKBTC gets more volume from the Bitcoin reward. Your lock BTC, we call it lock BTC, will also grow in your wallet automatically.
Okay. Awesome. Yeah. So you always have that native exposure. There's no centralized authority who can lock you into your lot BTC. So just quickly, we have a question from M. Do mining pools also distribute the computations so there is less redundant work?
It's not actually do that way. Basically, what the Bitcoin mining activity works is that there's a problem, and then like a lot of like probably right now is 4,000 peta exa hash or so total hash rate in the world. They're competing to solve that puzzle, right? So what mining pool does is just, let's say you have 100 miners in this mining pool. So this mining pool, if you mine solo, you probably the statistical probability you will get the block is probably 1 in 1 year or 1 in 2 years. But if you connect to the pool and there's 100 miners like you with the same hash rate amount, and you will always get paid in Bitcoin every day. That guarantees you to get paid every day.
Okay, awesome. Yeah, I think good background on how the mining actually works from a cryptography and math perspective. In terms of so Loka Mining, are you guys launched now? When do you plan to launch? Go live?
Yeah, we actually already live on the mining pool itself. I can show you the dashboard.
Yeah, do you want me to pull up your screen? There we go.
Yes. Yeah, this is actually from my own Bitcoin miners, my own ASIC machine. So this is live. The mining pool itself, we have our Stratum server, so that we have a community of miners connecting to our mining pool. But it's a small community. It's still kind of like in private beta, invite only. We're still testing a lot of stuffs. We still provide our own liquidity, and then we haven't opened the liquidity pool to the public, but we will do so in this queue probably in the next few weeks. We haven't really set a time to launch yet, but yes, we actually already live. It's just like we built on stealth or so. And I think what we're if you're a so this project is actually it's a utility project, right? It's not meme project.
Yeah.
So what we do, what I'm actually busy on is actually talking to a lot of different client or different partners, because in this protocol actually we have we have two different customers, right? Supply and demand. This is like two-sided protocol. The supply side is Bitcoin miners. We actually build connection with all like big Bitcoin miners, and also one of our investors is one of the probably provides like 1.5% of total hash rate in the world. And then once we're ready, then we probably onboard them. And from the demand side is retails and also institution. Like, for example, I think it's like a custodian company for, let's say, um, I cannot really mention a brand right now, but let's say institution that allows you to, usually they take custody of your crypto. This kind of like institution, like there's a lot of many institutions that become our potential partner. We're talking with them. What they do is basically they take custody of crypto investors, traditional investors that want exposure to crypto,
Mhm.
but they don't want to handle with the private key and other, like they basically very conservative, but they want to exposure to crypto. They want to hold Bitcoin. They also want to grow their Bitcoin. So
Mhm.
this institution want to give yield to their customers, and we as a protocol give the native yield to the institution.
Okay. Yeah.
So
It
it's like, yeah, interest provider for banks, but it's crypto.
right. No, it totally makes sense. And so I think what I'm gathering from you is from a liquidity provider perspective, there may be some retail interest, like maybe I have some CKBTC and I want to put it to work.
Yeah.
So I bring my Bitcoin as a retail investor. But it sounds like you also are trying to line up some major institutional investors who,
Yes.
again, are custodying or providing exposure to Bitcoin to their clients, and then perhaps want to provide some yield on top of that.
Yeah. Yeah. Because it the protocol itself is, imagine if you hold like 100 Bitcoin, and then your option is just hold it, or you can actually convert that to contract of future mining reward, and then you will grow that Bitcoin. It's probably like 10-15% per year. That will be super high actually.
Yeah,
And it's collateralized, it's tokenized. It's very interesting for them.
I love and I totally get it as somebody who holds Bitcoin myself, but Bitcoin with its triple digit annual returns, and yet we still think, how can I get some more yield on top of this price
Yeah,
appreciation?
yeah, because you don't think in US dollar anymore if you hold Bitcoin. I mean, like if you like you basically you want to grow your Bitcoin. So from the but it's kind of a different point of view from Bitcoin miners because their cost in US dollar. But if you're a Bitcoin holders, you just want to grow your Bitcoin. You need your horizon is longer. You just want to hold, or you want to grow because you don't really care in the short term the price of Bitcoin.
Mhm.
Right? So you just want, okay, how many? If I have 1 Bitcoin now, and then next year I have 1.1 Bitcoin, just by putting my Bitcoin to this ecosystem, that will be
Mhm.
very awesome, right?
Yeah, yeah. Is there specific, so you're mentioning on the liquidity provider end, you're thinking all ends of the spectrum from the retail all the way up to institutional. Are there specific miners you're interested in? Like, are you looking at large scale, like maybe even like I think Riot and Marathon come to mind of like these are large scale. They actually have publicly traded stocks. Or are you looking more on like the
Yep.
smaller players who are already maybe part of a mining pool, and then they might want to switch over to Loka's mining pool? Is there a target
Yeah,
audience?
I think the later, Kyle. I think we actually have there's a lot of medium-sized company miners that don't have that actually run their own treasury, have their own investors, but they cannot grow as fast as the big players because of the liquidity issue. They don't have uh, access to capital efficient financing, and that's what we gave them.
Okay. Oh, I see. So a marathon, which has access to large capital, they would maybe have less interest in Loka mining
Yep.
because they already have access to that capital. That's a good point. Okay. If you're watching this live, we are taking questions. If you have any questions for Andy, go ahead and post them either on X or on YouTube, and we'll go ahead and get those questions asked. In the meantime, Andy, walk us through. So, I mean, you have jumped into the ICP community in a big way. I see you involved on X, and one good example of that, and this maybe is a little bit of a plug for them, but the ICP-CC is this May 10th, this Friday on May 10th. And I know Loka is a sponsor of ICP-CC. So kind of walk us through how you view getting involved with the ICP community, and maybe also getting involved with the Bitcoin community and kind of your efforts there.
Okay. So yeah, I think I mentioned my first Bitcoin is 2015, and I've been since I read Satoshi's Satoshi paper, but it's like it was peer-to-peer money, right? So what I do is just buying Bitcoin to pay VPN provider. So it's like a just digital money. So I don't really hold a lot of Bitcoin at the time. Uh, uh, so when I started to do the Loka idea on excess electricity, I joined Bitcoin Startup Lab, and then that's why we have Jan Kamenish to go as one of our mentor, and then he presented about ICP, and then we kind of looking into what chain or what infrastructure we should build on, and everything should be on chain, everything should be permissionless, and it should be capable to cater our need, because it's like, it's a it's very it's never been done before, and I don't think any other chain can host our project, because even the mining pool itself is on chain. We are in the process of creating our node, our fully decentralized Bitcoin mining node on chain. I don't think it's ever been done before in any other chain, because ICP has the storage layer, it has a computation layer, and then even like it provides everything, and we can just build it. That's how I um that's how I know ICP, from the history. I know ICP, and
Yeah.
then yeah, and then I was I contacted the Divinity Foundation, and then yeah, you guys are very welcome, and then yeah, we got grants, and that's really good. It was like very good support, and then yeah, and then here I am.
I always say, like, if an application can be built on Web 2, build it on Web 2. Because if you don't need the blockchain for the specific application that you're trying to build, or like whatever the product is, then it's kind of, there's maybe no reason to build on a Web 3 platform. And I think what you're capturing is local mining can't be built on Web 2 because you need to remove some of those trust assumptions. And you do that by building on the blockchain. I think you answered this, but I'll just ask it anyway. So Marquet asks, is Loka Mining pool fully on chain on ICP? Front end, back end, everything?
Yes, it will be. Right now is still on our private beta. There's still some off chain. That's why we haven't really launched it to public, because there's some still component that is on off chain, but we will do everything on chain.
Camilio asks, hi Andy, will there be a token sale? Guess you've already impressed.
Yes. When we do everything on chain is permissionless, it means that every revenue, every profit is also accrued in token. So, but we will do TGE like for sometimes later. We're not a meme project, but what we do is we're gonna have a liquidity program, just probably the same like other project, that gives you some kind of a reward token that will have that will is a like a transitory token to give you like allocation for the native token, future native token.
Okay, perfect. And then do you have any plans for further decentralization, like launching a DAO or doing an SNS or anything like that on ICP, or right now you're focused on the immediate execution? And those
Yeah,
first.
I mean, there's not much any to be honest, there's not much any decision to be made on this mining pool, right? I mean, probably what I see in the future is that this protocol is capable to have to expand to any other POW proof of work chain. And
Mhm.
also what we foresee is that this contract, the collateralized contract is actually worth the same as Bitcoin. And then we can also use that as a eigenlayers idea to restake to be a validators or collateral to for other chain as well, and then you get more yield, extra yield from that activity. So we can do that. I can foresee that uh, in the future, but I think it's I mean, the demand is there. I mean, even we don't we need to we just need to build right now,
Yeah.
and then yeah, because the demand is there, the supply is there, like everything we just need to build it, and then it's everything will fall into place. Yeah.
I'm smiling because back in it was probably like 2018, 2019. I remember there was I don't know if it's a meme or basically just a motto within the Bitcoin community that said Ethereum is the test net for Bitcoin. And basically the idea was anything that happens on Ethereum, the things that succeed will move back to Bitcoin over time. And it's just kind of amazing that, like, I'm seeing with kind of my front row seat on ICP, I'm seeing a lot of that. And like you just said, the eigenlayer, the ability to restake collateral is something that is real big within the Ethereum community now. And you're already talking about like, hey, actually, this is a component we can bring back into the Bitcoin or any proof of work systems. That's phenomenal. I'm going to ask this question if you want to predict the future. So by the end of 2024, what do you expect or what are you hoping for exahash? Or you don't want to, you
Uh,
want to put a number out there, which is fine.
yeah, yeah. I think in the term of exercise, it's probably confusing because it gets moving. I mean, it changes over time. It added. I think it's increase every day. But I would foresee that we target at least we have at least 1% of the total hash rate by early next year or by the end of this year.
Did you say 1%?
Yeah, 1%.
That's ambitious. Just given, I mean, obviously hash rate is
Yeah, I
one
mean
remarkable.
yeah, that's our target because statistically we need to have 0.7% of total hash rate to get uh Bitcoin reward a new block every day.
Okay.
So that's kind of like our golden number to get to 0.7%. We need to, when we launch, we need to get to as fast as we can to get to that number, and then furthermore, basically.
Okay. Awesome. I'll be following along. I love the ambition there. Um, Marquis 17 asking just a ton of great questions today. This is one I particularly love. So, what are the challenges of creating a full Bitcoin node on ICP? You mentioned that you guys are trying to create a full node, or you're in the process.
Yeah. So previously, one canister has limit like 400 gigabyte or so. I cannot remember. I think so. So the full Bitcoin node needs 800 gigabytes. I'm probably have a slight mistake on this number, but I think that what I remember. So it's kind of like we need 2 canister to host full Bitcoin nodes, but it's been upgraded to, I think it's 1.2 uh terabyte or so. I can't remember. I think that's kind of like the maximum capacity, maximum storage of the 1 canister is actually one of the challenges that we have. But
Mhm.
I think it is already solved, so that should be no problem.
Yeah, it hasn't gone live yet, but I know Dom has specifically stated the goal for AI reasons, not even for Bitcoin reasons, but just for AI reasons. The goal is to get to 1 to 2 terabytes per
Yeah,
canister by the end of this year. And
yeah,
so, obviously, running a full Bitcoin node from that new standard would be pretty simple. Um,
yeah.
any other challenges, or primarily it's just the Bitcoin state exceeds the size of a canister on ICP?
Yeah, I think that's all. I mean, we have idempotency challenges in ICP, but I think my partner, co-founder, is a wizard, already solved that. So that's fine.
Um, I'll also point out once you get a full node, I can guarantee you once you get a full node running on ICP, a full Bitcoin node, you're going to have other Bitcoin enthusiasts on ICP reach out, because things like having a decentralized indexer is something that Bitcoin is really lacking, especially if you're in the ordinals or BRC20 or runes communities. Then
Yeah,
you're relying on centralized
yes.
tech for that. So that'll be really exciting when you guys get there as well.
Yeah, yeah. Also, because we have our own mining pool, that means we can also collecting rare sats and then giving that sats as a extra yield for our liquidity provider, or we can use that as a bonus for our Bitcoin miners. It's like the possibility is endless when we have the infrastructure of our mining pool, actually.
Yeah, talk about because I'm not sure if a lot of
Hello,
people
Kyle.
watching are familiar. Oh,
Yeah.
yep. Are you still with us? Can you hear me, Andy? Uh-oh. I think we might
Yeah, I think my connection a bit, yeah, lagging right now.
it sounds like you're coming back. Am I coming through okay? Can you hear me now? All right, we'll see if Andy comes back with us. One of the things, so Andy had mentioned rare stats. Just a quick aside while we wait for Andy to reconnect. So rare stats are basically satoshis that have some sort of significant meaning. So, for example, you had the epic block with the halving, the first block after the halving, block 840,000, I guess it was. And those were considered to be, special and unique because it was the first block of the new epoch. It was the launch of Runes, the Runes protocol. So what Andy is saying is, uh, if the Loka mining pool were to mine that epic block, or a block that has some sort of significance, maybe it's the 1 millionth block, or it has specific stats in it that are more important than others, then the mining pool would have access to those somehow. So it would have exposure to it, whether that's then it's distributed somehow across the mining pool or somehow decentralized in that manner. Trying to look through, see if we have any further questions. A lot of maybe Marquise obviously got some great ones. We'll save this one for Andy if he can kind of log back into us. We lost him on his connection. I'm not sure if you saw, you can follow Andy on X at Talkin' Andy. So Talkin' without the G, Andy. You'll definitely want to keep up to date with that. And follow Leroy is claiming Andy's been abducted by the CIA. That's kind of funny. So follow, keep up to date. I think Loka Mining is just Loka Mining on X, so you can keep up to date there. And really exciting stuff, as Andy said, next few weeks, coming out into maybe a few months for the official go live. I'm not seeing Andy log back in, so I'm going to wish everyone a good day. Thank you guys for your for tuning in, and keep again, follow Loka Mining. You want to keep up to date on what they're doing and learning how you can participate and help support them and help participate in the liquidity pool that they're going to be standing up. Next week, we're going to feature Bitfinity and Bionic, and we're going to also do the Motoko Sentinel glitch airdrop live. So if you're a Sentinel fan, make sure you're tuning in next week, same time. And I wish everyone a good day.